For more on what he expects in the next year for real estate, I'm now joined by Ryan Gorman. He knows a thing about real estate. He's the Coldwell Banker CEO. Ryan, thank you very much for joining us. You're one of the biggest brokerages out there. Tell us about whether or not the residential housing market will continue to be as hot in 2022 as it has been in 2021 and 2020.
Certainly. Well, we've got a lot of the fundamentals working in our favor. So I thought Diana covered tremendously well in a hurry and added some good context from John, which is great. You've got those pressures continuing to build. You have buyers continuing to look to buy and oftentimes rotate where they're living. In many cases, one Coldwell Banker survey has about 50% of young people and those living in higher cost areas willing to take a pay cut to move to a more affordable area. You're seeing that show up in terms of the overall migration patterns. That's keeping buying strong and hopefully bringing some more listing inventory on in 2022 across the market, not just those high market locations. You've also got that investor interest that Diana mentioned. I'll say, though, there's another investor interest that's going to work in our favor, which is investors looking at those private mortgage-backed securities, not quite fully stepping into the Fed's shoes, but certainly bringing some positive pressure downward on rates as they look to buy. So there's pros and cons, but 2022 seems like it's shaping up to be a strong seller's market again, perhaps not quite as strong in some ways as 2021, but we're seeing a lot of strong fundamentals.
You know, it's interesting because Diana brought up two I guess, rising points that are going to be key for any home buyer out there, myself included over the past several years. That is higher prices, that's a ding for the buyer, and also higher interest rates, also a ding for the buyer. Both of those are likely to persist in 2022. How exactly then do buyers navigate that kind of market? We know sellers are going to be in a good position, but what happens if you're a buyer? Should you be buying right now?
Sure. So everyone should be buying if it's right for their lifestyle. So hopefully it was for yours, and hopefully we can connect you with a good Coldwell Banker agent to make another purchase if you're in the market. But buyers today are benefited by a lot of different things, one of which is those who are able to work perhaps remotely part of the time are able to increase their search radius. So while we are seeing home prices rise, we're actually seeing in many cases affordability increase as real wage growth increases and people are able to look in areas that are a little bit more affordable to them. That might be 2 train stops out from the city, or it might be 2 states away where they can actually afford to step into a place that may be a little bigger and a little more affordable for them. So there's a lot moving in that buyer favor, I think.
Ryan, and before we let you leave, you mentioned this investor appetite for homes as well. Is there any fear from a policy standpoint, from a housing market standpoint, that single-family buyers are getting priced out of this market because investors, whether they be hedge funds or real estate people looking to just buy investor homes to rent out, is it something where this housing structure is now going to be different going forward because of the arrival of investor money?
Well, the structure is always going to evolve. Certainly, we've seen investors piling into the single-family rental sector in a way they never had before, but it hasn't made an enormous impact, right? So most single-family homes historically that were held out for rent were owned by mom and pop. People who owned 1 or 2 of those homes to rent, approximately 12 million of those. A few million more have been added to that equation coming out of the Great Recession, and some are being built to rent as well. Typically, though, this institutional money is coming in and buying either high-quality assets or turning the assets they buy into higher quality, which is favorable for renters. We are seeing first-time buyers step down to more like a quarter of the market as opposed to a third, so that is a concern. And on the new home purchase side, we've seen a lot of new home construction where now you've got an even smaller portion of the population of new homes that are below $300,000. We've got those sort of very, very small portion of overall new homes. That really typically is an entry point for new buyers. So I do think the builders are going to be rotating more, if they can, into that new home segment that appeals to first-time buyers. And I think many people are going to see the overall appreciation of their home when they connect with a good agent, educating them what it's worth in today's market, stepping onto the market with inventory that will be attractive to first-time buyers, and they'll be able to step in and take advantage of some really historically low interest rates.